Let's start with the first conversation, and in fact, let me introduce my first guest. We're joined by the Managing Director of CBRE, Gaurav Kumar. And thank you so much, Gaurav, for taking the time. I apologize for having made you wait. But I do want to speak about the fact that we've been seeing reports, developers have been telling us that the situation on the ground is significantly better than it has been in several months and years in the recent past. Is that something that the data backs up? What are you seeing on the ground, and what pockets in the real estate space here in India, specifically with regard to residential, stand out to you?
So, one thing we must bear in mind is that residential or housing is coming off a 5-year bear run. So the entire industry is sitting on accumulated demand, which hasn't really translated into actual sales for several years, and not just COVID. COVID has actually been a great catalyst while it's played havoc with our lives. But as far as the resi sector is concerned, most people have now realized the value of the home because they've spent so much time in it. When you talk about data, if you look at the first 6 months, our data shows that there's a 75% increase in volumes year on year in 21 vis-a-vis 2020. Of course, 2020 was a low base because COVID had delayed a lot of decision making. But overall, I think that people are a lot more bullish about the fact that they need to own a home. There was this very big conflict in people's mind whether they should just stay at a 2% yield on a rental or actually buy a home. That's completely changed in the last 12 months. I think most people appreciate the value of having bigger homes, smarter homes, because they've spent so much time with their families, with their children, everyone's online. And even if we start coming back to offices, which we will, I think this whole mindset change has already happened. So absolutely great times for the residential industry.
It's interesting because I'm guessing that this hybrid model is going to continue for at least a while longer, and a lot of industries might in fact change the way that they operate. So what you're saying is actually something that makes a lot of sense, in that you could see that a lot of people buy houses to stay in them rather than as investments. And I'm guessing that that is the case right now. But what areas specifically stand out? So I'm thinking that Bengaluru would be a very key market, considering that the IT boom that we're currently seeing means higher paychecks and quite a bit of money flowing in.
All the tier one cities have been tech driven. Whether you look at Bangalore, Pune, Chennai, Gurgaon, many pockets of Mumbai, Hyderabad, some pockets of Calcutta. The last 10, 15 years, real estate has tech to thank for as far as growth, both in resi and office is concerned. So that very much remains the trend. If you look at pockets of growth, I think you have now customers wanting larger homes. So even if there is no significant increase in the budgets, they're happy to go slightly further away from where they live in what we call as the suburban or peripheral locations to get larger homes. Integrated projects is really the flavor of the day, where if they can walk to work or where they have captive retail, hospitality services, education, healthcare, if they can get all of that within arm's length, that's another big area of growth. In places like Delhi, you have those who can afford it. Farmhouses has become the flavor of the day. So clearly the focus is not just on how you live, but where you live, how spacious your apartments or dwelling units are they equipped for working from home? We've all suffered that firsthand. So I think interesting times for the resi sector. And, there's also a flight to safety. So if you look at it, most buyers prefer, either finished inventory or they want to buy in projects with very, very high quality developers. And as a result, there's a large amount of consolidation going on even on the sell side. And therefore, I feel that as volumes are increasing, we should keep a close track of prices as well. Because if everyone wants to buy in a handful of projects with a handful of developers, then at some point in time, capital appreciation will kick in as well.
You know, that's it's interesting that you make those 2 points, because those are exactly my next couple of questions to you, Gaurav. One, what are the price trends? But perhaps we can talk about that next. What you just mentioned on consolidation, and this is something that we're witnessing, I think, for a few years since the introduction of RERA, and then I think that was accelerated with the shock that we witnessed on account of the pandemic. But what exactly are the data points that suggest that this is happening to you in terms of the project launches, perhaps, or maybe the size of the projects? Is that something that you're looking at?
So over the last few years, if you see, your inventory, which is they calculated as number of months, unsold inventory, etc., has consistently been coming down. Project launches in terms of quantum has also been coming down for a whole host of factors. RERA has been great for the industry. I think it's given a lot of confidence to buyers to go ahead and pull the trigger. But clearly, most of us operate on sentiment, and what we've seen a change this year is actually a change in sentiment. That's why most people buy. And my advice to home buyers would be is that it's always great to buy in a market where you have sellers offering you freebies, SOPs, value-added products, possession link plans, vis-a-vis buying in a market where there's everyone's running helter-skelter for units. There is price escalations, price appreciations going on, and we remember the heydays of residential 7 or 8 years back, and that time resi was the in thing to buy, and everyone was making a beeline. But if you compare it to the scenario today, where your prices are actually lower than replacement cost of those products, there is great benefit in buying, not just from a developer perspective, but also from a home loan perspective. And home loan rates are the lowest in the last decade that they've ever been. And now in the festive season, you have a further 30-40 bips reduction. There can't be a better time to buy. You've got to buy when it's cheap to buy rather than when everything's running up.
I take your point entirely. In fact, and stamp duty reductions, a lot of benefits out there. In fact, my next conversation is going to be about exactly this. But I do want to ask you, Gaurav, from the perspective of the price situation, have you seen a run-up in the prices in some pockets? Are there likely to be run-ups? We've seen that prices have stayed more or less flat for several years now in the key development markets. How long is that going to continue?
So there's not been an across-the-board price run-up, but in select projects, in select locations, with select developers, there have been price appreciation of about 5 to 8%. Now, it may seem very minuscule, but in the context, like you said, there's been no price appreciations for the last 5 or 6 years. In fact, it's been the contrary, right? If you look at net price after you deduct the cost of a possession-linked plan, or after the cost of a subvention plan, which is something that most of us don't calculate, prices have actually been going down over the last 5 or 6 years. So in that context, I think this 5 or 6% also in select pockets with select developers and select projects is quite meaningful, in my opinion. I don't expect a major price increase or a major price escalation going forward, but I think it's going to be a good, solid investment in the long term, because you're now going to see more and more product from well-capitalized, credible development firms. So, your risk of losing life savings in a resi home or getting very delayed deliveries, thanks to both RERA and the quality of development firms, is going to be very, very low. That risk is going to be very low.
And that's exactly what I'm going to be speaking about very soon. Thank you so much, Gaurav, for laying the foundation, so to speak, for my next conversation. Pleasure speaking to you as always. Thank you so much for taking the time.
Thank you. My pleasure.